Ted, so we're going to talk about a great brand, one of my favorites actually. Love their beer, love their barbecued food. Was delighted to hear that they are going to go public. So I'm really hoping that the finances show that this should be a good investment, or at least the finances show a good story. What have you found out, Ted, on BrewDog?
Well, you're absolutely right. So that they are starting to issue shares, and here is their prospectus. So we'll just pick up from their prospectus some of the key points. You notice down here that they're trying to raise 7.5 million. They've got a stretch goal of 50 million. So they're trying to raise a total of 50 million through this IPO. You'll notice that the shares, they're selling the shares for about 25 quid each. And the minimum investment is 2 shares. So for £50, Moeed, you too can own a brewery, or be a part owner of a brewery, which is fantastic. But you're absolutely right to ask the question about the finances. Is this a kind of an emotional investment? And I want to be part of what is a great product. And I have some Punk IPA in my fridge right now, or are they actually, do the numbers add up? Is this going to be a good investment? So let's have a look at the income statement. And here we see the income statement, and you'll notice, okay, so we're looking on the left-hand side, you'll notice they're making a profit of £1 million, okay, on sales of about £215 million.
Right.
Now, just a few things to highlight here. First of all, this number here, you don't often get in any other type of a company. They're paying 20% duty. Okay, so there's an alcohol tax here in the UK, and they're paying duty. So immediately they're down to 175 million. Here's the cost of sales. So that's the cost of brewing the beer, gathering all the sort of the hops and all the ingredients, and then the actual brewing process leaves them with a gross profit here of 75 million pounds. Now, here I'm just going to leave this section, and I'm just going to take you back to the early part of the financial statements, if I can, Moeed, and look at the income statement. So in their financial review, they state operating profit 3.7 million, and they talk about EBITDA, and EBITDA is effectively controllable profit. It's saying I can't control the tax, I can't control the interest, I can't control depreciation, amortization. They're talking about EBITDA of about 17 million. So that's another way of saying underlying profitability. Right. Now, I have a little bit of a problem with these numbers because this is window dressing. They're trying to present as good a story as they possibly can. Let's go back to those numbers we were looking at. So what you will notice here, Moeed, is if you look at these numbers, there's a key one here, which is the profit, the gain on the acquisition of the Berlin Brewery and Tap Room. Now, I don't know the details of this acquisition, but what I do know is that they've shown a profit or an additional income of 14 million pounds. That wasn't in there last year, and guess what? That isn't going to be in there next year. So I would suggest we need to take that out and put it down as other. I would take that out. In fact, I'd take all of these numbers and put them down in here. Operating profit is a loss of 13 million. You can guess the 88. So the operating profit is a 13 million loss. And even on an EBITDA basis, it's still a 2.2 million pound loss. Okay, so at the core basis, they're making a loss. That's my interpretation of these numbers.
Okay, so that's a really important point, and I want to stop there just to make sure that our viewers are clear on what this is. So you're saying that they made an acquisition, right, of Berlin Brewery and Taproom. They effectively got some gains from that acquisition. They've stuck that within the P&L portion of the financial statement, and they've used that to realize a higher EBITDA. for the current year, for the year of that finance. But you're saying that it wasn't there the year before, and it's not going to be there the year
Absolutely.
after. No, so my question is just for anyone that's looking at other businesses and want to look out for something like this as well. Is there another term that they need to look out for in other businesses? I.e., do they name it something else, or are there different ways of naming that particular gain?
Not really. It's just looking at it and just thinking, what you're really asking yourself is anything that sits above. So here we've got operating profit. Okay. Anything
Right.
above operating profit, anything up here has got to be part of day-to-day running the business. Okay. This is not day-to-day running the business. This is a one-off. This is a bit like Moeed. I don't know. You know, your rich uncle suddenly gifting you $1 million. It doesn't mean that you're now earning $1 million a year. It's a one-off.
Right.
Okay. This is exactly the same thing. This gain on loss of property, this is incidental. I mean, it's a small number, so it's really pretty insignificant. And some of this, I guess that, you know, there's if they got other operating income, you know, maybe they're saying that's our, I don't know, sales of t-shirts or something, then that's fine. You can probably get away with keeping that above there. But really this bit down here, this finance income and finance costs, this section of the P&L is really where we put bits which are kind of incidental to our core business. If I'm buying this company, I'm buying the core business. They brew beer and they sell it and they market it, and they're very good at marketing it. You know, they've got a great product. They've got a great, you know, you look at the brands they have, you know, the way they brand their cans with, you know, comments. I think they had a Dominic Cummings a beer when he went off to Durham to visit his parents. So they're very, very good on their marketing. And it's a bit like Innocent, for example. They're funky, they're cool, they're different, they're not bland, they're not boring. You know, it's a great company. But financially, you've got to be making a profit at that core operating level. And I think, you know, they're breaking even at best. That's my interpretation.
Right. Really interesting. Really interesting. Thank you for finding that out, Ted, actually.
So if we look at so you'll see on the right-hand side of this sheet, you can see the balance sheet. Okay. There's nothing really that worrying in the balance sheet. They've got a lot of, you know, a lot of non-current assets. So these are all the brewing facilities that, you know, there's the actual brewery stuff that they're brewing with. They've got quite a lot of cash. 35 million, so they're not going to run out of cash quickly.
Right.
So pretty strong on the cash. You know, they've got quite a lot of current assets. Current liabilities is not really a big issue. Okay, so they've got nearly 100 million of current assets and only about 60 million of current liabilities. So liquidity is not an issue. They've got a little bit of lease liabilities going on down here, and some financial liabilities, which is the debt, but very strong in terms of their assets. You know, the equity. It's an equity funded business, and you can see this share premium account here. The movement in this share premium account is showing that, you know, they are raising cash by issuing shares.
Right.
Okay, and that's part of this kind of this IPO. You know, they're issuing shares ahead of the actual flotation. They want you and I to buy into it and to benefit from it. However, if we actually look at this company in terms of those finances, so my analysis, so looking at BrewDog, and here's an example of some of the different ales that they produce, and you can see that they're, you know, there's quite a lot of fun. They're very funky, different names. You know, there's a kind of a real, you kind of buy into that brand and that image, and maybe that's what we're buying. Maybe they're going to be like the Coca-Cola of the beer world. Who knows? But you know, first of all, we've talked about this net profit. Are they making £1 million? And then, you know, so the EBITDA, is it 2.2 according to me, or are they making the 17 million that they say they're making? I think they're really struggling to justify 17 million. That's not their core profitability. We've talked about their stretch target is to raise 50 million. If they succeed, then that's a PE ratio of 733 times their net profit. Okay, which is expensive. A lot more expensive than Facebook. for example.
Yeah, Facebook.
That's half. Yeah, I mean, we're getting into Tesla territory here. Now, even if you use their EBITDA of 17 million, they're still trading on 45 times earnings, which is very high indeed. 45 times earnings. I'm not saying these guys aren't going to double and double and double again. Maybe they are. Really? You know what? I'm not 100% convinced. It's a tough market out there.
Yeah, just to put that in perspective, most of the breweries out there, or the majority of breweries out there, are only trading at 10 to 15 times PE ratio. So that is incredible,
and that's a reflection of the risk.
Yeah. Apologies. There's analysis that said in the UK that they're worth more than M&G, Green King, and Weatherspoons put together. And they only have a fraction of their revenue and earnings.
Okay, so we're now starting to get into the Tesla argument, where Tesla is worth as much as the next 6 or 7 car companies. You know, and again, we're mentioning that about BrewDog. Anyway, if they succeed with this fundraising, they'll end up with a market cap of about 770 million pounds, I reckon. Their net assets, the equity invested in the business, is 177, and therefore you are paying basically about 600 million more than it is worth. Okay, wow. So effectively, you're there's an inherent goodwill in that market valuation. Now, I'm happy to be wrong on this, Moeed, and I've been wrong before, but you know, if you're looking for a lifestyle investment, if you've always wanted to say you own a brewery and you've only got 50 quid in your pocket, then you're absolutely knock yourself out, buy your 2 shares. But if you're buying it as a financial investment, strip away the kind of the brand and the I own the shares. If you really just want to do a financial investment, I'm not 100% convinced. It looks very, very expensive.
Right. Really interesting, Ted. So if anyone watching this is seeing some of the advertising and the posts out there, as you've been seeing on Facebook, inviting people to buy into their shares and to look at them, have a look at this video first so that you can make your own judgment, right? So this was incredibly helpful, Ted. Thank you so much.